Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro daily update for March 17th, 2025. Happy St. Patrick's Day. I should have changed to a green background. Um, Title today, Small Caps Lead Markets Higher, but no follow through day, unfortunately. It would have been nice to get a follow through day, but just because we didn't get one today doesn't mean we can't get one tomorrow. Email address, marketmripro@gmail.com. If you're new to my YouTube channel, hit the subscribe, hit the alarm, and you'll get notified when I do these. I try and do them certainly every weekend and a few times during the week. You'll hear about my Google group. I post them there when I don't put them on YouTube. Sometimes I'm just lazy. And I want to create value for the people that sign up for that group. As always, this is for educational purposes only and should not be considered investment advice. The intent of the video is just to demonstrate how I use the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy, go long, short, sell any stock mentioned in this report. And trading stocks and options should be considered risky. You should always consult with your financial advisors. And I have tools in multiple platforms and am an independent trader. I'll try and get something out tomorrow morning at stocksanddocs.com for those of you that like the wealth charts video. That's where I put that one. This one will be various platforms. A little different approach than I have done in the past. Orange County meeting, June 6th through 8th, resident inn and suites is starting to fill up. We always have a great time, and it'll be the best $300 you ever spend towards a trading education. I've mentioned my Google group. It's free. It's not for solicitation. It's my way of having a mailing list to send things out. I'll have invites to educational sessions. I'll give discounts on any products I have. And it's a great place to ask me questions about the various products. Go to Google Groups, sign in with your Google ID, search for Top Down Trader, and let me know how you want to be contacted. So Monday was okay in the market. Tuesday, we've got lots of news. We got housing starts, building permits, import prices, industrial production. That'll be important, making sure that we don't have signs of a slowing economy and a recession. But we're all waiting for Wednesday's FOMC report, which should be a big yawner, although maybe they'll give some clues that they're concerned about a weakening economy and maybe more rate cuts will pop up on the Fed rate prediction tools. Still got lots of earnings, as you can see here. Most of the major companies that we follow are out, but not all of them, because look, we still have on Thursday Micron, Nike, FedEx, Lennar. So Carnival Cruise Lines on Friday. So still a lot left. As it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. By the way, if you can't tell, these are unscripted. So sometimes I find mistakes in the slides, like, hey, I spelled higher wrong. I forgot the ER. But, I have a full-time job. I run a business with a lot of employees. And so I don't have time to script and practice. If I don't like how they come out, I toss them. So you're going to hear some scratching noise, some whistling noise. I've got a horrible head cold. You probably shouldn't be doing this. But anyways, if we look at the one of my favorite screens is the daily brief. It tells me that the Russell was up 1.26%, the Diamond's 0.93, Spider's 0.77, the Q's 0.65. We could see that new high, new lows. Look at this. On the NYSE, all time frames had some new highs. Small numbers of new lows on the NASDAQ. That's clearly an improvement. Leading one-day change on the S&P 500 sectors, real estate, energy, staples. That's not an aggressive. That's kind of a defensive looking, where discretionary, utilities, communication, tech brought up the rear. Everything was positive. So even though it was a strong day, it has a defensive posture. I didn't see that coming. I had just looked at my account. If I look at one-day change here, China, clean tech, solar, uranium, China, cybersecurity, e-commerce, silver, cannabis, Norway, retail up at the top. I know it was at the bottom from a theme category. Let's do this. From the bottom, look at this. Almost all the themes look like they were up today as well. The bottom was preferred, home construction, covered calls, robots, metals mining, Southeast Asia, and infrastructure development. All right, so over here it tells me that almost all the sectors were up, almost all the industry groups up, and 83% of the stocks were up in the S&P 1500. That is a strong day. Similar pictures on the NASDAQ and the NYSE with 66% of the stocks up and 79. So the NASDAQ lagged, and it was only up 0.65, which is less than the other major indices. If we go very quickly, I want to look at that market breadth tool and show you that we had another signal in the markets on Monday, and that is the Eureka signal here. Now that gets me a little bit excited because 2 Eurekas in a row usually tells me that we might have a reasonable low here. So that may make me want to commit more to the market. My concern is, do we run into the 50 and fail? And we got big, massive move both on Friday and Monday. So let's see what happens as the week goes out on the NYSE. But that is encouraging. On the NASDAQ, much less of a move. Still worry about running into the 200-day moving average. Looking further down the list, we can see that the stocks above the 20, 50, and 200 have turned up on both the NYSE much more impressively than on the NASDAQ. And then if you look at new high, new lows, barely positive on the NYSE, turned up more on the NYSE, not the NASDAQ. Barely positive on the NYSE, still negative on the NASDAQ. The advanced decliners, positive on both significantly, and up-down volume positive on both. So definitely an improvement in the market seen on Monday. Question remains, bear cat bounce, small cat, a bear market rally, which can be ferocious, or something more. Don't know yet. We'll continue to watch. The timing model, let's look at the weekly charts. We continue to be in a sell on all four, no surprise, but look at the 3-month new high, new low, which really rallied off the bottoms, almost to overbought in some of the scenarios. So really a big 2 days in the market took out that overbought condition. Now the dailies, you can see big moves on the daily, but we're still in a sell on the daily as we are on the weekly. If I look at the U.S. index ETFs, let's just take a look at them here. Spider was up in the markets 0.77. I worry about running up to that 200 and failing. If it breaks through, it's got the 17, then it's got the 50. And there's probably where that 17 is coming down, could be some resistance there as well. So we're not out of the woods. Nice to see 2 positive sessions. Notice a 17 crossing through the 50. Over here, the 17 is about ready to cross to the 200, up 0.65 on the Qs. Looking at the volume, less volume on both of these than the prior session. There is no follow-through day. The diamonds ran up to the 200, and what did they do? They failed. Doesn't mean they're done, and they're not going to go higher. But that's kind of what I'm worried about. A breakdown from here would not be good. It would suggest lower lows. And then the Russell had a nice move and was up 1.26%, but again, the volume was less than the prior session. The VIX continues to come down another 5.81%, and the dollar remains lower at minus 0.38. If we look at the commodities in the markets on Monday, gold, which has been a star, was up another 0.5%, and silver, after opening up lower, was still up 0.21. Oil's trying to make a recovery, didn't do much, up 0.6. Natural gas sort of consolidating after a big run up, and natural gas was down a bit inside bar, minus 2.62, and it looks like the 10-year was down 0.05%, barely down, and the 30-year was down 0.35. So nice day in the markets, supportive with the dollar staying weak and the rates down. If we look at those buckets, we further shifted to the right. Hardly any stocks are down at the lower Bollinger Bands. That's great. Now we'll watch it move over the next few days, and we'll start to see if we increase the number of stocks above. It's kind of like a teeter-totter. It goes up high here, then it goes up high here. Spends most of the time flat in the middle. So right now, we're easing off oversold conditions. If I look at those ratio charts, again, we're looking at really two things. What's pointing up to the right upper corner, and which has the long white bars telling me that there's been strength of late. So staples have pulled back but had white moves, so defensives look good here. Utilities, real estate, and healthcare all look like they're trying to turn up at the end of the market. Discretionary technology remain in a tough condition. Energy gave up a little bit but still strong. Communications has come down some. Materials is also strong. If we go into the layout, JAS layout, and we're about to launch probably by the end of the week, I should get the beta of make your own layouts where we'll introduce additional indicators that are not mine and give you a chance to build your own charts. We're working on that, we being Praveen. Let's just take a quick look at sort of the big name stocks. I know people like to hear what I think about that. Amazon failed at the 200. Not a great sign. You know, it's still just below it. It was actually down 1% on a strong market day. Notice that the relative strength has broken down. The OBB looks bad. If I flip this up, this would be something I'd be buying. Maybe I should be shorting it. I still think we're in the bounce category, but if the market turned lower, I don't like what this is looking like. APP, a massive winner on the way up. Interestingly, traded down right to about this gap area and is bouncing. Still got to get above this 50. Right now, it's like the markets. Prove it to me. Google, not so nice. Stuck below the 200 as he's setting up a bear flag. Meta, stuck in between the 50 and the 200. Also looks like could be a bear flag. Microsoft, it's toast. Keeps trading up to the 17 and failing. Netflix got a big upgrade at a 1030 or something price target today. Let's see if our news capture that. Upgrade, price target, upgrade to buy. I thought 1100. Okay, pretty impressive. And I think we talked about this was probably the best of these stocks over the weekend. But notice where it stopped at the 50. NVIDIA, it's got a big day tomorrow with some AI conference. Teased us early and closed lower in the market. Not a big deal, down 1.76. But really struggling below the 200. And we're about to get a death cross of the 50 crossing below the 200. And then the big loser of late, Tesla. Looks like it's setting up a bear flag to go lower as well. So the big name stocks not doing so well. Now let's look at that JAS list, which is an NYSE, the NASDAQ, and the Amex all together. And so we get about 3,500 stocks. Well, notice the number went up. That just means the market's moved up some because we'll add to it when stocks get above $1. So let's look at it from a top-down perspective. You can see all the sectors were up on the session. Let's look at the momentum leader. Tech, cyclicals, which is discretionary and communication. Isn't that interesting? They were the laggards on the day, but they were leading over the last couple days. If we look at the leadership was communications, cyclical, and energy. And down here are 766 stocks that met that. Just look at the two-day momentum, and you can go through. These are the same things we saw over the weekend. Booking, nice bouncing off the 200. You'd like to see some of the other mag stocks do that. Mealy fighting its way back after selling off. AutoZone, a very expensive stock. Netflix making a big move. Spotify, one that we looked at over the weekend. Ulta, too low in the pattern for me. Another automobile parts pulled back to the 50 and breaking out ORLY. Look at the price though. It's hard to buy a lot of that one. Domino's Pizza, Baidu. So far I'm not seeing a whole lot I want to go out and buy. Maybe PDD. It's a high relative strength here at 83%. Chinese stock breaking out here. Had both a momentum and volume had a breakout the prior session. Look at relative strength and OBV and how they look different than what I showed you on Amazon. Now let's kill the sectors and let's just rank by momentum on industry groups. And let's get the top 10. 163 stocks, and let's just see if anything here is different. So we got the same players, bookings, Mealy, AutoZone, Alta, Orly. I mean, Orly looks great, but I mean, who can buy a lot of a $1,347 stock? Equix, big sell-off there. RBC, don't know much about it. Pull back to the 50. Had volume and a momentum. Had a CPR signal a day ago. Relative strength and OBV both coming in line. Let's take a look at the earnings story. Earnings are not to May. Had a good growth rate here. Good revenue. I mean, it looks okay. Kind of loosey-goosey. I'd rather have a tighter stock. United Healthcare, too far down. Like this over the weekend, I like it even more. If the market's so bad, then why is Berkshire Hathaway going out to an all-time high? Is it extended? I don't know why it's not showing anything here. That's weird because it's on monthly. Let's go back to daily. Yeah, it's getting extended, but it's not at 95. MLM, Martin Marietta, no. Here's your PDD again. Humana, no. Notice that we've now seen United, Humana, and now Elevance. So the payers are starting to look interesting here. I'm still not a big fan of buying stocks below the 200. Then you have MSCI trying to get back up here. BABA's another Chinese stock that's been on fire. Here was a little bit of a flag formation after a big move up and a breakout. I mean, if the flag started at 80 and ran all the way up to, say, 135, 145, 65, you could get 30 points from this breakout. So that one looks interesting. That's the second way I might do top down. And then the third way is say, all right, my favorite sector is communication. And let's just look at the top 3 in communication. And still the same ones are, I don't know, we didn't look at Anti, but it's cheap. TKO, pull back too far. Nexstar, Ever, quote. Well, this is an interesting looking one. Cup, handle, and a breakout. EverQuote Communication Services. That one looks interesting. This is, to me, what top-down is at its finest. I'm looking at either leading industry groups, leading sectors, top industry groups in a leading sector, and I drill down. Now, sometimes you don't have patience for that. You just want to know what to buy right now. So here's my little trick. I'm going to go in here, and I'm going to set this as weekly bongo up, longer-term uptrend. I want to be above the 200-day moving average. Price greater than 5 in 2 days of momentum in a row. Let's hit OK, and let's see if we get anything. Try that again. All right, so these are all of them. Let's add the filters. 5 greater than 500, price greater than 5, hit OK. Very quickly, let's look at these. Arts Capital Group. I'd like to see it above the 200, but making a big move here. Relative strength and OBV look good. ARQQ, another, I guess it's probably a quantum computer moving up. We talked about, I think, qubits over the weekend. Cardinal Health was one of my picks for the weekend. These are great stocks if the economy turns bad. Nice run up. A little bit of a sideways move, setting a new base and starting to break out. Checkpoint looks good. Now notice every one of these stocks looks interesting. Why? Because of the secret weapon of the 2-day momentum move. Enbridge, First American Finance, Finvolution. I like this over the weekend. I still like it. Let's go see over here what earnings are. I don't have fundamentals on this one. All right, so this is an interesting breakout from a flag. Fidelity for personal services, Global Life, big move up, pull back to the 50, breaking out. HASI, Hut, Chinese hotel chain. iTub, I never, Kinder Morgan, an MLP play, pull back, about to break out. That one looks interesting. Lemonade, um, run up, pull back, base, and breaking out. MNSO, here's another MLP. So that's two MLPs that I like. This is MPLX, sideways move and breaking out here. Probably pays a dividend. I'll probably find it right in here. And the dividend has a cheap dividend, about 1%. Not very exciting. QFin, FinTech stock, Ryan Specialty Metals. So that's what I like to do. I like to filter for things that I think have active signals. I kind of like Kinder Morgan here, and I like Lemonade. I like Fin Evolution. So those are three stocks that I'm going to be looking at. And then there's always Cardinal, who I sold one of my businesses to. It looks like it's ready to run as well. So just to summarize, we got a Fed meeting on Wednesday. All right, so I'm being tempered in my enthusiasm. Number two, I am still in the school that the markets are going to run up and fail. I don't know that for sure. We have not yet had a follow-through day, but starting on Tuesday or Wednesday, we can get one on the S&P 500 as well as the NASDAQ. I think it's okay to be nibbling here, but be careful. Remember, all the timing models are still short, but they will change if this market continues higher. So have a great day in the market Tuesday. I am traveling until Thursday night. Don't know what's going to happen on the road. I don't even know if I'm going to have a voice, but if I do, I'll try and do a video. Take care, everybody. And don't forget, hit the subscribe, hit the alarm, give me a thumbs up, and if you got a chance, go join my Google group. Thank you.